Well, moving briefly away from equities into the currency space, at least now, and we're joined by Matt Simpson, senior markets analyst at XENON FOREX. He's live in Melbourne for you to the minute. Matt, warm welcome. We're just hearing earlier from Ben Jarman, JP Morgan, when it comes to the Reserve Bank and the way the dollar might be handled this afternoon, saying in his view they'll be reluctant to re-engage in jawboning. So what's the market been pricing in leading up to that, if indeed you're sharing his view that they won't go there today on talking the dollar down directly?
Okay, good morning. I would actually agree with that view. We're going to see them jawboning it today. We've seen a bit of a shift in their stance. They've become more neutral, and they've kept away from comments about the Aussie dollar being too high. So when the statement comes out today, when I checked the charts just a minute ago, I saw that the Aussie was trading up. And it's quite common you see that before a news release comes out. I wouldn't be too surprised if we see a little bit of a sell-off during the statement. What I'd be interested to hear is just how dovish, or if it's dovish at all, compared to last statement that came out. Technically, from the Aussie's point of view as well, it's been a bit of a frustrating pair in that whilst it is technically looking bullish still and going up, it's been grinding higher. It's not been going that nice clean moves that traders like to see. And there's also a bit of an argument for a potential topping pattern forming out as well. So we've seen repeated attempts to get up to 945. It doesn't quite get there and sells off again. So if we start trading beneath 935, then we would confirm that pattern. Until then, it remains technically bullish, though.
And on the US dollar side of things, I mean, that's technically looking bearish? That supports that picture?
Well, the US dollar, interesting about the greenback is that's been looking since Friday progressively bearish. The Australian dollar hasn't really been capitalising on that as much as other currencies like the Canadian dollar and the British pound. So that's a little bit of a clue that it's not celebrating the weakness of the greenback, let's say. So that results in the choppy price action we're seeing. Whilst I guess I've had to make a call on it, it's slightly more bullish, but not as bullish as I'd like it to be. I suspect we will eventually be going up to 95, but not in that clean pattern that I'd like to be seeing. I think I've been quoting this now for about the past month, and we just haven't quite got up there. But I still stand firm that as long as we keep above 935, maybe even 932, we should be going up to 95 over the coming weeks, just not directly as I'd have hoped.
Matt, what probability are you placing on an alternate strategy from the RBA to talk the dollar down, i.e. flagging weakness more broadly, i.e. commodity prices, as impinging on the local unit's next move, i.e. capping these gains and actually triggering some selling that way today?
Okay, I think I'm putting it that it's not going to happen today because the greenback's probably not weak enough for that to be in there yet. Of course, if we do see continued weakness in the greenback, then they're going to have to start bringing that in. But they must already have a price and level that they're comfortable with, and I wouldn't expect them to wait until that level was hit before they start jawboning. So, like the others do, they'll wait until it gets a little bit closer, they'll start dropping clues. But if you compare RBNZ to what RBA is saying, RBA, they're dropping little clues, but they're not very aggressive, so I'm not hugely concerned about them jawboning today, or even changing that in the coming sort of weeks as well. When we look across what's going on a broader scale, professional traders are still net long on the Aussie dollar. There's a slight concern there, though, that whilst they are increasingly net long, the open interest is going down, so that's lower volumes. So that does suggest that the only people coming into the markets are buyers, and the bears are potentially hibernating. They may always be waiting for a better price to go short, which is obviously if it goes up. So they may even do the work for him.
Just more broadly, obviously volatility is still very low. What are the key events, I guess, coming up in terms of real trading opportunities?
Yeah. Well, on Thursday, 10:30 p.m. is definitely, I will be in front of my screens. There's about 7 or 8 key events coming at the same time from 3 separate countries. So we've got ECB meetings following their rate decision. We've also got Canadian trade balance, US trade balance, and we've got NFP as well been moved forward from Friday. We give it July the 4th. It's a bank holiday on Friday. So you've got these, individually they're volatile experiences anyway. So obvious places to look at 10:30 p.m. on Thursday. Look at the euro dollar, US dollar CAD. We expect to see some movements there. And the good thing about that, I suppose, with euro dollar is it's just as of today or yesterday, sorry, broke out of a 6-week range, leading. And once again, as we lead into the ECB rate decision, it's going up. I wouldn't be surprised if we see that dip back into that range throughout Thursday. As people keep buying euro leading up to that. US dollar CAD as well, it's trending down very, very nicely. I do think we've got some extra downside left in that, possibly down to 1.06, 1.056, thereabouts. Perhaps we'll see that on NFP. I mean, Fed as well, they'll be really wanting some good jobs data coming out following the GDP. The disappointing figures came out there. I think it's not looking particularly great for the greenback, and that's going to have a knock-on effect as well to help alleviate the sluggish Aussie dollar. It's just, as I say, it's going up, not as quickly as it should be, and perhaps Thursday we'll kind of see a bit of a momentous upbreak on the Aussie dollar towards 95, fingers crossed.
Just a brief thought as well, looking at Nomura's capital flow monitor, they've detected in Q1 that advanced country central banks sold CAD and bought A dollars. Are you expecting that trend to continue? Because it was interesting that EM central banks bought CAD and sold A dollars. So it was a kind of a reverse trade from the EM versus advanced central bank side of the divide. Does that continue into Q2?
Well, it's interesting to bring that pair up, because there's a pair I've been analysing the Aussie CAD, simply because it's been having some very good cycles from a chartist point of view. So I'm not sure about the data you've looked at there myself, but I know that I suspect we've seen the low of about, I think it was 3-4 weeks ago, and that is, in theory, if I got it right, is a 20-week cycle low. So that would actually put Australian dollar going stronger than Canadian dollar. And also, when I look at the Canadian futures charts and look at the cost positioning there as well, whilst it's on the brink of going that long, I think this is just a retracement. I think Canadian dollar is going to be turning bearish again as the weeks and months progress, which will obviously put Aussie dollar CAD higher in the course.
Right. Okay. Good insights. Appreciate them. Thanks, Matt Simpson there.
Pleasure.
Joining us there, Senior Markets Analyst at Think Forex.
A quick break on trading.